Richmond's real estate market is heating up fast, and if you're not in the game now, you're already falling behind. So Richmond is no longer a hidden gem. It's a booming hotspot for multifamily investments, but the numbers are off the charts. With vacancy rates tightening, rents on the rise, and massive corporate expansions fueling the economy, this city is shaping up to be a major player in the real estate game. So if you're an investor, developer, just curious about what's driving Richmond's growth, you need to stick around. Let's dive into the data and show you why Richmond is your next big opportunity. Part 1, Overview. So Richmond's multifamily housing market has been marked by steady demand throughout 2024. Over the past 12 months, over 3,700 units were delivered and almost 4,000 units were absorbed, leading to a current vacancy rate of about 8%. The demand rebound in early 2024 has largely focused on high-end luxury apartments, which saw a 77% increase in demand from 2023 into the first half of 24. Workforce housing has also experienced strong demand, although new supply has kept vacancy levels above the national average. With 5,500 units expected to be delivered in the next 18 months, vacancy rates are likely to remain elevated. Richmond's population growth, which is nearly double the national average, continues to fuel demand and maintain the market stability despite slower rent growth compared to other record-breaking levels seen in 2022. Part 2, Vacancy. The Richmond market vacancy rate is currently sits at 7.9%, one of the highest in Virginia due to the influx of new inventory. While vacancy rates had been expanding since 21, demand has recently caught up with the supply, stabilizing the vacancy rate. Much of the recovery has been driven by high-end 4 to 5-star apartment segments, which saw a surge in early 2024. However, vacancy rates are expected to remain higher over the next year as an additional 5,500 units come online, further increasing competition among apartment operators. Vacancy rates within the luxury segment are projected to rise to 10.5%, while moderate 3, 1, 2-star apartments are expected to remain vacant around 6.5 to 7.2 respectively. Part 3, Rent. Rent growth in Richmond has slowed significantly, with the average rents rising by just 3.4% over the past 12 months to $1,530 per month. This represents one of the lowest rent growth rates in the state, contrasting with the double-digit rent growth we saw in 2022. Workforce housing has been some of the strongest at 6%, while luxury apartments have experienced slower rent increases due to increased competition. Geographically, areas like Dinwiddie County, Hopewell County have seen the highest rent gains, with rent growth exceeding 5%, while submarkets with higher inventories like downtown Richmond and western Henrico County have seen slower rent growth, about 4.5%. Despite this moderation, Richmond remains one of the more affordable mid-size places in the region. Part 4, Construction. Richmond has been in the midst of a construction boom with over 6,000 units completed in 2023 alone, making a record for the metro. Downtown Richmond, mainly Scott's Addition and Central Business District, has led to the way the developments accounting for over 3,700 units since 2018. Other submarkets like western Henrico County, South Richmond, and Midlothian have also seen major development, with each adding thousands of new units each year. Although the pace of construction has slowed down slightly, there are still 5,500 units under construction across the metro, with about 3,000 expected to be completed by the end of 2023. Part 5, Sales. Sales activity in Richmond's multifamily market has been sluggish since 2024, with just over 21 million in apartment deals closed in the first half of the year, a stark decline from 231 million recorded in the final quarter of 23. Institutional investors have been offloading their assets, mainly in Chesterfield County and Midlothian, where demand remains strong. Private, out-of-the-area buyers have become more active, snapping on the high-growth suburban areas. Notable transactions include the sale of the Summit at Bonaire at $53.25 million and the acquisition of Belmont Hills for $102 million. While valuations have decreased over the past 12 months, the continued recovery in demand should lead to increased investment activity over the next 12 to 18 months. Part 6, Economy. Richmond's economy continues to grow, with total employment exceeding pre-pandemic levels by the summer of 24. The metro added about 38,000 jobs between early 2020 and the mid-2024, driven by sectors like trade, transportation, utilities, which grew by 9,500 jobs, and professional and business services, which added 6,100 jobs. So major corporation growth, with CoStar, Lego, Sanmar announcing major investments. Richmond's affordable cost of living, business-friendly environment, and proximity to major transportation hubs have made it an attractive location for corporate relocations, helping boost both employment and population growth. So I'm Justin, multifamily broker here in Richmond. Have any questions, you want to make your first investment or talk about selling, give me a call. Thanks for watching.